The other thing is real estate ancillaries. We were talking to, for example, Century Ply, and they are saying that they have embarked upon the next 2-year capex, which is larger than what they've done in their history thus far, and how growth for the next 3, 4, 5 years may be a CAGR of 20%, and they said that they want to be conservative. They don't want to be aggressive, and yet he's talking about 5-year growth of 20%. So, is this a theme which is completely well discovered, or do you reckon that as growth comes by, the valuation multiple argument could also come to the fore, simply because real estate is not a sector that has had now 6, 7, 8 years of tailwind behind it. It's just been a recent phenomenon.
Correct. I think compared to the overall market, I don't think the valuations is factored in, the kind of growth that you could see. Because I think few of the things have changed structurally in these, whether it's the plywood, MDF players, or tiles, that India has, the imports into India of whether it's tiles, MDF, plywood is almost gone down to zero. So that's where that demand from the Indian players have gone up. And at the same time, there are countries outside. So US has put in anti-dumping duty on tiles, and India has completely benefited out of that. Recently, the Tiles Association players were saying that the annualized export of tiles is almost reached 17,000 crores. Which is phenomenal. I mean, which wasn't even 5,000 crores 2 or 3 years back.
Wow,
right? So it's more. So that's the kind of growth we are seeing, and at the same time, because of the energy situation in Europe. I mean, Europe, Spain, Italy were pretty large players in this. Their cost of manufacturing is just gone through the roof, because you need a lot of energy for manufacturing, say, tiles, and hence they are also out of the market. So I think there is India growth story plus added benefit of export opportunities. And if you are one of the players who can do both, I think you are in a great position, to take advantage of both. And the valuations there are, I mean, especially in the tiles players, I think it's a non-consensus play, because people are worried about the gas prices. Even in India, the gas prices have gone up, whether you look at the Morbi belt or north or south.
Yeah.
And hence their margins have been impacted. So I mean, their prices, the stock prices haven't changed in the last couple of years. That's where they are at. And I believe that the valuations may look as high as what the others are, but I think it's because of the margin compression that sometimes in the short run they superficially look high, but as soon as the margin expands, and most of them, I mean, they have taken huge price rise. I mean, almost every quarter they take 2 or 3% of price rises, right? And at the same time, hopefully in the next 6 months or 1 year, maybe the energy, especially the natural gas prices in India, may come down. And whenever that happens, if it doesn't happen, even then they would have already taken up the price enough to come back to their normalized margins. If the prices go down, input cost most of the time they will not take the prices down, and their margins will expand well beyond their normal margins. And then the P multiples would start really looking attractive at that point. So I think that's a pretty interesting theme, the building materials in the real estate ancillary place, which I don't believe is frothy.